Hey everyone, Couch Investor back with another video for you today. So in this video, we're going to go over some strategies regarding 4 stocks. 3 of them have been covered in recent videos: Palantir, Unity, and ARCIMOTO. Those 3 stocks have seen insane volatility going from, for example, Palantir going from $10 to almost $30 in a matter of weeks. Since then, obviously, the stock has cooled off. Same thing with ARCIMOTO and Unity as well. We're also going to discuss Alibaba, what's going on with that, because it has seen an all-time high of around $320. Since then, it has crashed down to around $250, $260. So we're going to see what potential good plays could be done in those 4 stocks. But before I get into this video, if you haven't subscribed to this channel, I would really appreciate it if you hit that subscribe button. We're on our way to 6,000 subscribers. And if you like these videos, leave it an early thumbs up, as it really helps me outgrow the channel and get my videos out there. So without further ado, let's dive into this. Right, so first stock we're going to discuss is Palantir. We're going to look at the graph first and then see why the stock has actually crashed to the price it is today. So as we can see here, since my last video, which was right around the prices right here, $10, $11 or so, the stock has gone up every single day to a top of more than $33. So if you've bought since my video, you've 3x your investment in a matter of weeks. But since then, the stock has actually gone down 37% from its highest point to its lowest point yesterday. So for me, that's a good enough, let's say, reason to maybe, if you haven't opened a position yet, to start nibbling around that stock. We see here in the RSI that the stock is no longer overbought. Obviously, we would love it that RSI could go a bit lower, but hey, you can't always get what you want. But let's see why the stock has actually crashed so much, besides the point that it has gone up 3x in a matter of weeks. So we have here Morgan Stanley downgrade sends Palantir shares sliding. Now the firm said the company is trading at a significant premium compared with its peers. So they say here, with Palantir up 155% since listing, with very little change in the fundamental story, the risk-reward paradigm shifts decidedly negative for the shares. Obviously, we all know when stocks go down and nothing changes fundamentally, we know this is just a market reaction. But when the stock like Palantir goes up parabolically in a matter of weeks and nothing really changed, we know it might just be a short-term play by some big whales on the market. Now, yes, they announced very strong Q3 earnings. And they have new deals, new contracts. In third quarter included $91 million deal with the Army, a $36 million contract with the National Institutes of Health, and a $300 million renewal with an aerospace customer. This is all great, but does that justify a 3x increase in the share price in a matter of weeks? I don't think so. And next up, we have another great stock, which is called Unity. Since my last video, the stock has gone up 50%. Obviously, it has been pulled back a little bit because of a downgrade. We're going to look at that right now. So we can see here, yes, first up, the stock was always going up, down, up, down, up, down, but always in a upwards formation. And then it broke out of that high resistance that was, I think, $100, $105. Since then, it has gone all the way up above $150. Obviously, we can see here RSI all the way to $150. It was in a perfect environment, then overbought, and now we're in the normal but still high RSI. So better watch out for that. If you still didn't have an entry in Unity, I would wait for the stock to go a bit sideways and hopefully a bit down so you could pick it up cheaper around 130. And if it goes even lower, even better. But what's the reason again for this big red candle and another little candle the next day? Is because Unity stock cut to neutral from buy. So on Monday, one analyst got altitude sickness and downgraded Unity stock to the equivalent of neutral from buy. Oppenheimer analyst Andrew cut his rating on Unity stock to perform from outperform. Now he says, quote, "Look, we love Unity and firmly believe the creative market will see exceptional expansion over the long term. Moreover, we see several paths to near-term beat raises. However, in every scenario, the vast majority of upside to our price target would come from the terminal value and more robust assumptions. We can't stretch any further on valuation." Eurowitz also removed his price target on Unity stock, which had been $113. So again, this is a story of a company that has been maybe going up too fast without any fundamental change. So my best play would be here, wait for it to come down, maybe to go back under the radar, because right now Palantir, Unity, they're all very hyped up at the moment. So wait for it to come down. It's always better to buy a stock that has been stable for a while rather than one that has been going up every single day or down every single day as well. You don't want to catch falling knives or chase a stock on the way up. All right, and next up we have ARCIMOTO, another one of those stocks that I've covered in recent weeks. This stock was lingering around $6, $7, maybe even $8 for months now. Since that announcement, since that earnings report, the stock has gone parabolic. We can see actually right here that the stock has gone as high as $20, but since that huge top, it has actually retraced 46.80%. Now, like I said in my last video, I took some profit because, well, when a stock goes up 70% in one day, you always like to take some profits in case something like this happens. Some of you asked me, why did I sell some of my position? Because it's only starting. Well, the reason is because I just bought yesterday for just $11. So, hey, be greedy when others are fearful and be fearful when others are greedy. So same thing here. I like the stock way better at around $12, $11. Obviously now pre-market we're back over the $13, but I like it way better right now than when it was at $20. And actually a funny story came out from the ARCIMOTO CEO. So he claimed that Elon Musk crashed their three-wheeled electric vehicle in an interview with Gali from Hyperchange. He says here that Elon is the very first one to ever crash an ARCIMOTO, a production ARCIMOTO. He jumped into the driver's seat of Adeos ARCIMOTO and promptly drove it into a brick wall. Classic Elon. Alright, and lastly we have the biggest Chinese company out there, which is Alibaba. Again, this stock peaked at around about $320. Since then, some couple of bad news and obstacles came out, and the stock has gone all the way down to around $250, $255. Right now, as we can see here, it's at around about $263. So it's been a 20% retrace from its highest to its lowest point. And if you want to know how much that is to this day, it's around 17.74% retrace. Now, the reason why Alibaba has gone down from its highest point is because of those things right here. First up, we have the Ant Group that was supposed to go into IPO stage has been delayed. So Alibaba's stock recently tumbled after Chinese regulator derailed the public debut of its fintech affiliate Ant Group. Alibaba holds a 33% stake in Ant, which owns the digital payments platform Alipay. Again, this was supposed to be one of the biggest IPOs out there and is one of those huge players in this digital payment, digital wallet universe, let's call it. And with Alibaba holding a 33% stake, obviously the stock took a hit. Now, the second reason why the stock has gone down is because of this. Chinese antitrust action is just an inconvenience for Alibaba. So same thing that has been happening for the US companies such as Amazon, Apple, Google, etc. is now also happening in China against companies like Alibaba. So the Chinese government's State Administration for Market Regulation wants to stop anti-competitive practices in the internet sector, but whether Alibaba and Alibaba stock should be worried about those potential changes depends on who you talk to. Morgan Stanley thinks it's an issue. They say here, we believe potential implementation of the new antitrust regulations has negative implications for major internet companies with dominant position across segments. Again, maybe something will happen, I don't know, but it will probably take a lot of time. And in China, I don't know what's going to happen there, I don't know what's happening there with regulations or not. But in the United States, we've been talking about this antitrusting for a while. And did something change for Amazon or Apple or Google? Niet. So for me, this huge pullback in Alibaba and also the other stocks is just an opportunity for us, and for me especially, to buy quality stocks, quality companies for cheaper. Now, to conclude this video, I did buy some Palantir stock yesterday. I did buy more FUV stock yesterday as well. I did not buy any Unity stock recently. I will be waiting for a bigger pullback. And I opened a position in Alibaba yesterday as well at around about $260, $261. So for me, these dips are actually a great opportunity to strengthen my position or to open a position in a company that, well, might be a short-term play. For example, Alibaba could be a 20% play if it goes back up. If some news comes out that, let's say, the IPO goes through, you can expect a huge green candle on that stock as well. For FUV, I know that's a long-term play, but again, I prefer to buy a stock when it's pulled back around 30 to 40% rather than buying a stock that has been going up for days after days, 70%, 80% or so in a week. And that will be it for this video. Let me know down in the comments below what kind of stocks, what types of stocks you have been watching or buying recently. Let me know down in the comments below. And if you like these videos, leave it a thumbs up. If you haven't subscribed to this channel, hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.